Another question I want us to also take a look at is how do you determine, when it comes, I see on your apartment investors, dealing with the investors out there, also choosing your asset. How do you determine which multifamily asset will fit your investment criteria?
Sure. Well, we have kept really strict investment criteria, and it's really been the same since I started to now. So we have we have a combination that we're looking for of cash flow out of the gate, opportunities to increase the value of the property, and we look at how much money needs to go into curing deferred maintenance.
Okay.
So those are things we look at. How much renovations need to happen? What kind of cash flow can we get out of the gate? And then what can we do with that asset over, say, a 3 to 5 to 7 year period? And so we have that written down. We underwrite to our criteria, and we put out a lot of offers that have to fall in line with our criteria. So we don't change that. And if it doesn't fit our underwriting, we'll put in an offer to where it does fit, but that may mean that we may not get a lot of projects that we bid on. But the ones we do get have performed really well.
Wow. So it's important how you get it so that you can get out well.
Yeah, I think most of the profit on these projects comes from buying it right. You've got to buy it right, and then you've got to perform well in the operations. So just as important as buying the project right, you've got to have management of that property that is aligned with your goals on the property, and that's going to manage your business plan for the property effectively to grow that value of the property. Otherwise, you'll see projects that we'll buy from an owner, and they haven't pushed the operations on it at all. And maybe their property has maybe appreciated 10-20% over the last 20 years. We'll come in and buy it. We'll manage to a business plan. We'll do key upgrades, and then we'll be able to push that value of the property tremendously.
Amazing. So the
key is having alignment.
Yeah. So the key is buying right and making sure that you stay true to your business plan.
Having written down criteria, sticking with your underwriting guidelines, buying right, and then operating efficiently through your business plan. So making sure you stay on top of the operations. So you can't, even if you buy right, you're not going to make your business plan work unless you're managing well as well. So they have to with that. And I think that's one thing that people underestimate in multifamily real estate is that the amount of operations that need to happen and how strong your operations team needs to be to manage those properties effectively. It's not the same as going in and buying a building with a Starbucks in it and waiting, for those checks every month on a retail investment. It's something that you have to actively manage business plan.